Good evening, everyone, and welcome to tonight's special presentation of Toni's Market Club. I'm Tina Hosley, the Director of Operations for ToniTurner.com, and I'll be facilitating tonight's session. Toni Turner will be our presenter for this evening. Please take a couple of moments now to read our disclaimer. We are pleased to present tonight's special session of Toni's Market Club presented by Toni Turner. Toni is the best-selling author of A Beginner's Guide to Day Trading Online, 2nd edition, A Beginner's Guide to Short-Term Trading, 2nd edition, and Short-Term Trading in the New Stock Market. She is also co-author, along with Gordon Scott, of their most recent book, Invest to Win. Toni is a popular educator and sought-after speaker in the financial arena. She speaks regularly at trading forums and conferences across the United States, including college campuses, traders expos, and money shows. On the screen, you'll see an example of a typical Market Club session. During the Market Club, Toni covers a question of the week, a market overview, trading approach for the week, a mini trading lesson, trading ideas for stocks and ETFs, a review of open trades, followed by a question and answer session. So with that, I'm going to turn the microphone over to Toni so that she can get moving with our sample session of Toni's Market Club. Thanks so much.
Hi everybody, this is Toni Turner and I'd like to welcome you and thank you very much, Tina. I'd like to welcome you today to our webinar where we kind of want to go over what we do in a Toni's Market Club session. We have these sessions every Monday. They begin at 4:30 and they end around 6 o'clock. I see quite a few Market Club members in here today, and I've at the very end I have a new trading idea, so you guys might benefit from that. So I love to have Market Club members in here. And I'm really happy you joined us. So welcome everybody. Yeah, our session goes a little like this. As Tina just told you, we start out with a question of the week, and I'm going to give you a real quick rundown of that. The question of the week it pertains to market psychology. It's how you approach the market mentally and emotionally. And believe me, I've seen in the last, 18, 19 years, I've met people from all over the world, and I've talked to a zillion traders and trained thousands of traders. And I'm a trader myself. I trade every day. And please believe me when I tell you that your mental and emotional approach to the market, how you look at the market, even how you regard yourself, even your self-image, what you think of yourself, all has to do with whether or not you become a success as a trader or investor. It's not a good thing or a bad thing, but there's certain ways you have to think in order to be the most successful trader you can be. And that's why every week we start our Toni's Market Club session with the question of the week, and I'll give you an example in a minute. And this is so important. It's so important for you to have your head on straight when you approach the market. It's key to your success. Then we go into the market overview and we talk about what's going on in the market during that week, what economic reports are coming out that are important, what sometimes, depending if it's earnings season, what earnings are coming out that's important. So we get a feel of the mood and manner of the market before we get in. As you all know, investors are bottoms up. They look at the market from the bottom up. They look at the market maybe one stock at a time, and they don't care what the market's doing. They just want to be in that stock, usually for fundamental reasons. Now, traders, we need to go from the top down. We need to look at the market as a whole. We need to see whether it's raining outside or it's sunny, whether we're meaning are we in a bear market or a bull market, or are we trading somewhere in between? What is the overall mood and manner of the market? What's the weather out there? Because getting into a long trade and packing your account, backing up the truck for a great big high momentum trade during the middle of a market that looks like is going to be ready to head in a downtrend is not a good idea. We want to get defensive when the market starts to look a little negative like it has in the last few days. We want to make sure our stops are in, and maybe we don't want to put on very many long trades when the market's moving south because we don't want to get stopped out right away. So you want to look at the market overview. You want to at least look at the S&P 500 and see what it is doing before you jump into trades. And why do you care what the S&P 500 is doing? You care because in bull markets or in upward trending markets, the S&P 500, 3 out of 5 stocks will follow it higher. In downtrending markets, 4 out of 5 stocks will follow it lower. And that's why we make such a big deal out of the S&P 500. It's kind of our leader. It's what we look at as a kind of a form of a crystal ball. Wherever the S&P 500 goes, to a degree, that may be where your stock will kind of head for. After the market overview, we do a quick review of some open trades that we have, and I say, okay, you guys, maybe move up your stop to here, or this is what this stock is doing. Maybe we got stopped out. Maybe it moved a lot higher. Where do you put your stop now? That kind of thing. Then we have a mini trading lesson. We pack a lot into this hour and a half, hour and 15 minutes, or almost 2 hours sometimes, but usually about an hour and 15 minutes. We pack a lot in, an hour and a half. We have a mini trading lesson, and yesterday we talked, or I should say Monday, we talked about opening gaps. How do you deal with opening gaps? What do you do with them? How do you trade them? When do you get in? Where's your stop? What do you look for? So we did a mini market lesson, or a mini trading lesson, I should say, on opening gaps on Monday. Then toward the end, we go into our trading ideas. I usually give you 5 trading ideas. 3 of them are long and 2 of them are short. These are stocks and ETFs. We also have a little bonus. Many times I'll give you a low price stock that I call a Vegas trade, and I don't do all the research into it. I don't go into the fundamentals, and I do go into the fundamentals when I'm looking for our main trading ideas. I don't expect you to, but I do, because if you have good fundamentals, if you have a reasonable price to earnings ratio, if it's paying a good dividend, if it looks like earnings estimates are going to move up in the future, and have they been good in the past, I take the time to do that for our trading ideas. For our Vegas trades, however, I do not. I'll see a pattern I like, and usually they're low price stocks, and I'll say, okay, here's your Vegas trade. I like the price pattern. Here's where you enter. If it's something you're interested in, please go in and do your own due diligence. And lately, we've been getting in on Vegas trades. We've been getting into some cannabis stocks, and a couple of them have taken off very, very nicely. We have one stock. I'm not sure if we're still in it today, but we've made 119% on it so far. So we do sometimes our Vegas trades are the ones that take off. It's funny how that works. But anyway, and then we, of course, Tony's Market Club members can ask questions and all the way through our session. So let's get going here and look at a couple of things. First, we'll look quickly at the question of the week because it's so important. Everybody loves to ignore their psychological approach to the market, how they're looking at the market, and it is totally the wrong thing to ignore. We won't spend much time on it today, but please know how important it is. As this slide says, your mental and emotional approach to the market will determine your success. And our question of the week gives you a question, and then I want you to answer it. Now, I'm going to give you an answer, but I want you to look within yourself and say, how am I doing with this particular question? How am I thinking? Recent questions that we've gone over during the trading day, am I constantly striving for excellence? During the trading day, am I constantly striving for excellence? And maybe we've forgotten about excellence. Maybe we've forgotten that we're going to make sure we have a trading plan. That's excellence. Um, and I'm not going to carry on much more about this, but these are important questions. What trading patterns do I have that limit my success, and how can I eliminate them from my trading day? Maybe you don't obey your stops. That's a trading pattern that can limit your success. Finally, do I grade my trades and adjust my risk accordingly? Do I grade my trades? And I like to grade my trades A, B, C. A, B, or C. Is this a really good trade I'm getting into? Do I really know all about this stock? A B trade would be, I don't know that much about it, but I like the pattern. And a C trade is, I don't know where my stop is. I'm not sure of the profit target, and I guess I'm getting in at the right place. And they go down from there. So that's what we're talking about when we talk about grade my trades. And asking these questions, then I'll give you an answer or explain it more, but then I want you to look at it and really think through how you want to do that yourself. Now let's get into the market. And this is a daily chart of the S&P 500 SPDR, symbol SPY. This is a chart that I captured today pretty close to the market close. I couldn't get it exactly at the close because we had to be ready for this. But looking at this market at the S&P 500 SPDR right now, you can see that, let's see, where is this pointer? I don't like that very much. Let me see if I can draw in here. You can see that the SPY today, it actually closed at $257, and it actually closed today at $256.57, and the 20-day moving average is the red line on this screen. It's coming in at $257.35. So the S&P 500 has been in an absolutely fabulous uptrend, actually since the beginning of 2016 and a little before that. It's finally getting a little tired here, you may have noticed. Now, we haven't had a 3% pullback in I forget how many months, and we need one, Markets move in cycles. They don't move in straight lines up or down, although we've had a near straight line since 2009, with the exception of 2011, 2012, and the beginning of 2016. So at some point, this market has to get a little tired, and if we had the time, we'd look at this on a monthly chart, and you would see what I mean. This looks pretty mild-mannered right here on this screen, but a chart of the S&P 500 since 2009 gives you an almost breathtaking feeling of, oh my gosh, it's shot up into the air much longer than uptrends usually last. So in the Market Club, we've been pretty cautious, actually, in the last month. And what do we do when we're cautious? We use smaller share size. When we go long especially, we do smaller share size, and we have very firm stops. We don't fool around with our stops. I call them no kidding around stops. So at any rate, right now, we can see that the SPY closed at $256 and change. It's the first time it's fallen below the red line, the 20-day moving average, since August. It may head down here toward the 50-day moving average. Put on full screen if you want. It will help you. I'm not sure if Tina showed you how to put full screen on, but Tina, are you there? Okay, there is a, oh, I know, it's the small icon at the bottom on the left, right down here. If you click on it, it will give you full screen, okay? So that will help you see this chart a little better. Thank you. All right, so now we have support, potential support at the 50-day moving average. That's down here at $253.89. I'm going to watch this very closely to see if the SPY can bounce off the 50-day moving average when and if it gets there, and it'll get there at some point. That's going to be important. We actually have pretty decent resistance at 250. Whoops, that didn't draw where I mean at 250. 251, 250, 245, we have meaningful resistance under the 50-day moving average. Now the black line on this screen is the 200-day moving average. It's coming in right now at about $243. We know for sure we do not want the SPY to drop below the 200-day moving average. Now it's moving up really nice angle moving up. That's positive. So we want to, this would really be, I would get very, very defensive should the SPY move below that line. But we want to be careful here. We do have support down here at 249, so below the 200-day moving average, or especially below 249, which are these lows right here, we want to be very careful. And that would be 2490 on the S&P 500 itself. 2500 would obviously be just above that. So in the short term here, the 14-day RSI is moving lower. In the short term, the MACD line, the red line, is below the black line. That's a slight negative. They're both slight negatives. So yes, we need to be a little cautious here adding new positions and maybe not put on a full position when we get in. In Tony's Market Club, we talk about nibbling, and that means when we enter a new position, we enter it with maybe, when we nibble, instead of buying 500 shares of a stock, we'd buy 200 or 300 shares and then add after that. Now, we go over some of our recent trades in Tony's Market Club, and any that anybody has any questions about. We have a lot of open trades at any one time that people are in, so we usually can't cover them all. We may have 10, 15, 20 open trades depending on what the market is doing. This is a recent trade that we still have it on. This is Ingredion. This company actually takes different fruits and vegetables and grinds them up, manufactures them into different products. I liked the chart, then I researched the company, and so I watched Ingredion move up. Now, by the way, in Tony's Market Club, we have a setup called the Sleeping Tiger. They are not these moving averages. We do use the green line, the 50-day. We do use the black line, the 200-day moving average. We have two other moving averages that we use. It's called our Sleeping Tiger setup to get precise entries and exits in our trades. I didn't put them in this webinar. You'll find out if you join Tony's Market Club what these moving averages are and exactly how we use them to get the most successful swing trades that we can. But I'm showing you these trades anyway because, of course, they still work beautifully. So what we did with Ingredion, I like the way it moved up off its summer lows over the 50-day moving average. It dropped. This could have been an earnings report. I'm not sure. Then it made kind of a cup with a handle pattern here, back up over its 50-day moving average. And then when we caught it here, we caught it on October 23rd. And I said buy and look to buy Ingredion if you like it over $125.12. As you can see, we've held it since then. Ingredion has been moving higher, and today, I don't think I captured the exact price here today. It's like at 134, 135. So far, we've made a 7% profit. We haven't been in it that long. Now, one thing you might be interested in, for Tony's Market Club, we give you documents when you join Tony's Market Club. Tina sends you PDFs. There's several of them that show you exactly how we do our trades. So you can be all alone on a Tuesday, but you will have these documents and you will know how our Sleeping Tiger setup works, and you will know from what I told you on Monday exactly where to put your stops. We have a document called Protective Stops, and in Tony's Market Club we give you three different strategies. They're all very simple. 3 different strategies to use for your stops. Some people like very quick swing trades. They want to get in, take the center out of the Oreo and get out, and that's all they want to do, and that's fine. We have a stop for that. Some people want to say, yeah, I'm going to take part of my profits here, but then I want to wait and see if it starts back up. We have a stop for that. That's our stop number 2. Then our stop number 3 is the person who goes, I like to see if this thing can keep trending higher. I know it's going to swing up, pull back, maybe start up again. I don't want to miss that move if it starts up again. And I approve of that because the longer you stay in a winning trade, the more money you make. It's that simple. You're not paying out commissions. You're not getting nailed with slippage. The longer you stay in a trade that's performing correctly, the more money you make. So we have a third protective stop, and those are the stops that are on the Thursday update. It comes out every single Thursday afternoon. And the Thursday update stop is the final stop. That would be the loosest stop because you bring it up once a week. And then, of course, if it falls through that stop, you exit the trade. So we give you 3 simple choices, but there's the final stop. Please, please, please get out here so you don't take big losses. That's for sure. So you have, depending on your trading style, you have choices. So we're looking at ingredient here at any rate. So far, it's gone from 125.12, and it looks like now, I meant to capture this price today, it's about 134, 135. And we've made 7% so far, and that's pretty good. We haven't been in it that long. Now, our next trade that I want to look at, that's a recent trade. We're still in it. Here's another one. Here's Micron. A lot of you guys probably know this. Sorry, I thought I turned this off. Micron Instruments, a lot of you know. We got into Micron Instruments. See how nicely Micron almost did the same thing as Ingredient. Came down here in July and August, made a nice little dip down, then came back, consolidated along this line, and then started higher. And we had signals from our setup that this would be a good entry. So we said, okay, we're going to buy Micron on October 23rd over $31.25. And that just means buy it a few cents over that price. Not much, just a few cents. So from there, we're still holding on to Micron. This is November. And if you use the Thursday update stop, you're still in it, and you've got a 45% profit so far. Micron has just kept going. Now, I admit to you that several times in the Thursday update, I've said, hey, you guys, please take some profits. Please take some profits. And then Micron laughs and just keeps going up anyway, which is a good thing, Okay. So Micron Instruments still going strong. Would I enter it here? That's up to you. We do have a longer term trading strategy, but I could say to you right now, as long as Micron's above the 20-day, the red moving average, that may be some kind of strategy that you want to adopt right at this moment, and if it falls through it, you get out. Thing about big momentum stocks is that if the market does go down, and if it goes down all of a sudden, a lot of them, probably more like Netflix, Facebook, Amazon, Alphabet, they will, if the market falls off hard for a reason, they will fall pretty fast. Micron maybe not quite so much, but these stocks have gone up a long ways, and people will take profits if anything happens. So at any rate, this is Micron doing great so far. Let's see if we've got another trade here. Here's a new trade that we just got into on Monday. Now, you have to know, remember what I said to you before, 3 out of 5 stocks will follow the S&P 500 higher, and 4 out of 5 stocks will follow it lower. Doesn't mean every stock will follow it lower. Certainly some commodity stocks may not. You could see some stocks like perhaps the metals or gold or silver, that may go up in the face of a market turn down, that's for sure. but most large cap stocks, not penny stocks, and biotechs go their own direction most of the time. But most stocks will follow the S&P lower, and that's what happened with Altria Group. We talked about it Monday, and my instructions were, let's look at Altria. We have it in our setup, our Sleeping Tiger setup. It looks very good, and you can see here on this screen easily that Altria has been trading above its 50-day moving average, making kind of a base on a base. This base kind of on top of this prior kind of drifting down, kind of a base, kind of a drifting down base, came down and made a low here, down around $60 and change, then moved back up and is now moving on top of the 50-day moving average, which is positive. I checked Altria's fundamentals right now, and of course this company owns Philip Morris USA. Of course, you know they do cigarettes, but an interesting thing is that most of these cigarette companies are going to be getting into the cannabis trade. Now, whether you think it's right or wrong, this is a financial webinar, so I'm not going to go into that. If they get into it and it bodes well for them, as cannabis will become legal in California, the world's 6th largest economy, in January. Of course, it's opening up in Canada and more of our states. Again, whether you agree with it or not, you could still make some money on it. So that may be what Philip Morris is up to, and it's trading at quite a discount to its high back here around 78 back in this summer. It came way down to 60 and change, so it's really sold off here. Now it has a price to earnings ratio of 8, which I looked up, and is paying a dividend of 4%. Well, now that's attractive to institutions. So I'm watching it stay above this 50-day moving average again. And you might still be able to get into MO here if it doesn't roll over, if the market rolls over. We said in Tony's Market Club that we have a window to get in between 65.50 to 66.20. So there's, I didn't mean to draw that there. This is drawing higher than I thought. So I have a little window here that if Altria comes down and then bounces and moves back up into it, that may be a good place to enter, as I said, between 65.50 and 66.20. Then I said if it moves up and over 67.50, you could add to that position. Our original stop here is at $63.80, and that's right down about here. And our initial profit target is 68.80, so almost up here to 69. Now, we have the 200-day moving average coming in here. This could cause resistance, and we know it, but we're far enough away from it yet. We're not going to worry about it until we get there. And so those are the prices that we put onto the entry, the profit target, the entry, the protective stop, and the profit target are always the 3 prices that I give you in Tony's Market Club. So you're good to go for the week. And then again, the Thursday update comes out on Thursday, and I may well have moved the stop up at that time. Of course, you also will know by the setup where your stop should be. So this is MO. We're looking at it. If the market moves higher, there's a chance MO could move up in coming weeks. If the market rolls over, it obviously could head back down. So I'll talk to you real quickly about the Thursday update. This is a document that I think the last one I did was 25 pages on a Word doc. We mail it to your inbox every Thursday afternoon. It gives you the current market overview and events going on, kind of our trading approach, what we think you should, how we think you should approach the market for the coming week, whether you're bullish, bearish, or neutral. We put that in so you kind of know which way to go with that. We give you current support and resistance levels on the major indexes, and that includes the Dow, the S&P 500, the NASDAQ 100, and the small caps, the Russell 2000 small cap ETF, the IWM. You know, small caps have the ability to lead the market higher or lower. They act as a leading indicator. And so if you watch the IWM, one reason I'm so cautious right now is that it is rolling over a little bit more than the S&P 500. It's fallen below its 50-day moving average. And that is another warning we have that maybe the market isn't as strong as it has been. So that's another reason I've gotten very cautious lately. I don't want anybody to get hurt. And so that's another reason we're trading right now with small share size and tight stops and firm stops. So the Thursday update shows you again current support levels on major indexes, and then most importantly, it details every single trade, our new trades and all of our open trades, tells you where to move your stop up to, or if we got stopped out. I give you tight stops. If say the stock is trading way above its moving averages and it's overbought, I'll say, okay, you've got a tight stop here and a looser stop here. So you can use either one. If it falls through half, if it falls through the tight stop, maybe you want to take half your position or all of it. And then if it continues to move down through the long-term stop, then you definitely get out at that point. But I give you choices. We give you choices so that you can adapt them to the way your trading style is. Okay, so let's move on here. Tina, will you introduce this, please?
Thank you, Toni, and thank you everyone for joining us today. Please be sure to stay with us. Toni will be back in just a moment with her final trading idea, so we wouldn't want you to miss that. So far today, you've had a chance to get a brief sneak peek at what we do each week in Toni's private trading group called Toni's Market Club, and we'd like for you to join us each week. As always, there are no hidden fees, contracts, or obligations with Toni's Market Club. This is a risk-free program. So for more information, if you are watching the recording of this video, you can click on the orange button below that says click here for more information, found right below the video. So please take a moment to visit our website to read more about this exciting opportunity to join Toni each week in Toni's Market Club. Now, as promised, here's Toni with her final trading idea for today. Thank you.
Thank you, Tina. Okay, let's go on to our final one for the day. I probably should tell you guys that we still have some of our original members in Toni's Market Club that go back. We started in March of 2009. Actually, the week the market started up, and did I know this was going to be the beginnings of the biggest bull market in history? No, of course not. Nobody else did either. In fact, if you remember the bear market of 2008, 7 and 8, and down into the March of 2009, we were pretty darn sure that at least some of the world as we knew it was going to be over. But I started Toni's Market Club, I believe it was March the 15th. I know it was St. Patrick's Day in March of 2009, and we still have some of our original members from the first days of Toni's Market Club. And I will tell you that I count that as a compliment to us. Tina is our Director of Operations. We have Annette Helsper, who is our Market Research Technician, and she takes care of the TMC Forum, which is an online forum where you can go and ask me questions, which I will answer, or I will answer them in the trading room. We'll use it as a mini trading lesson. And Annette posts all the trading ideas and all of their entries, protective stops, and profit targets in the forum each week right before the Market Club is over. Plus, of course, you get the recording of the Market Club in your account a minute after it's over. So there's no need to worry about attending it live. If you can't do it, it's no problem. Most of our members can't. You get that recording just a minute after the market's through. Plus, again, you have immediate access to all of the trading ideas and their entries, protective stops, and profit targets. So the fact that we have all this to offer, the fact that we've had members with us for like 9 years now, I count that as a compliment. With that, let's go on to what I did today was I looked at some new trades that we have going on. And actually, for you Market Club members that I see in here today, we hadn't looked at this trade. I just found it. And I had seen it the other day, and I wasn't sure it was going to move or not, but I think it looks good right now. This is Chewy's. This is a daily chart of Chewy's Holdings Incorporated, symbol CHUY. Now, as you can see, Chewy's, most restaurants have gotten creamed. A lot of them, they say, got Amazoned. How a restaurant gets Amazoned, I will never know. But anyway, Chewy's and most other restaurants have had a really bad summer. And as you can see, Chewy's, it had been doing pretty well. It's come down in a real dramatic downtrend here. Bottomed out down here at about 18, actually lost about 40% of its value from its prior highs, and a lot of restaurants have. They've just gotten killed. But it bounced up here in the beginning of September, moved back up over its 20-day moving average, more importantly over its 50-day, made a higher low here, right here. See how it bounced off the 50-day moving average and is now starting to walk up its 20-day moving average. Now, it moved higher yesterday up to a high of $24 and about 30-some cents, then backed off. But what's interesting, and if you can see this on this chart today, what's interesting, in a down market today, in an ugly market, Chewy's made, can you guys, that's what Chewy's did today. If you can see this red candle right here, it came down. It actually gapped up slightly at the open, moved down to the 20-day moving average, and closed on its highs at $23.45, or right around there. I captured this a couple of minutes before the market closed. So Chewy's here looks like it really wants to start up. So I can give you this trade as an idea. If the market rolls over, Chewy's is going to probably roll over too. If the market rallies, it looks like it could go a little higher. So with Chewy's here, there's a window entry here. I want it to stay above its 20-day moving average. So I'm going to give, in case it falls, you want it to fall. If it's falling like a stone, for goodness sakes, don't buy it. But if it falls down to its 20-day moving average and then starts to bounce, there's an entry window here of 2250 to 2380 that you could enter. There's a window here. And again, if it's falling like a stone and the market's falling, don't buy it. Wait till it looks more positive. So you could enter from 2250 to 2380. I would put my stop here at $21.30. That's where I would put my stop. Please don't let it go below the 50-day moving average. And then we could look at a profit target up here at 25.50. And that's a pretty, I need it down a little bit, that's a pretty short-term profit target. But what we're going to find here is it's going to run into the 200-day moving average. That may cause some resistance. So this will certainly not be a straight-up move, and it's not going to be with most stocks, especially if the market's falling. But it could happen over a period of time here. So I want to look at our profit target over the 200-day moving average. Now, if it breaks above that and it's still moving higher, I probably would only take partial profits at 25.50, or I may not take profits at all if Chewy's can keep moving higher back up toward 27. But again, that remains to be seen because our market's not feeling really good right now. It's feeling a little tired, so it remains to be seen what the market has done. So I've given you the entry of 2250 to 2380 window, a stop at 21.30 and a profit target of 25.50. You can work within that range and just keep drawing your stop up underneath. If you want to, in this case, you could probably use the 20-day moving average and a close below that as your stop if it moves up higher in the next few days. So that is a bonus trade for you all today. And for anyone in here from Tony's Market Club, please take it and use it. Finally, I just want to say, as in closing again, we have a wonderful group of people in Tony's Market Club, fantastic group of people. A lot of them have been with us for a long, long time. We have a good time. We have a good time. The first Monday of every month, Tina pulls a name out of a hat of one of our members, and we give that member a Toni Turner trading of his or her choice, anyone they want, off the website. So we do that as a gift because we're grateful for all of you. So please, if you'd like more information about Tony's Market Club, go to the link you see here, http://tonyturner.com/Tony's Market Club. Those are hyphenated. You can always, if that confuses you, you can always go to tonyturner.com and click on Tony's Market Club. If you have questions, you can email Tina, at info@tonyturner.com. And if you are looking at this as the recording, again, you see a red button under your screen, you can click here for more info. Click on that, and that will give you the information. So please check us out. We would love to have you as members. I think you'll enjoy it. A lot of our members are very complimentary, and as I said, they've been with us for a long time, and they would not have been with us if they hadn't been successful. So I think we can really help you, teach you how to learn how to trade better, how to make better trades, help you along, and help you become a more successful trader. That is my goal, and it will always be my goal. So thank you so much for coming. On behalf of Tina Hosley and myself, please stay careful out there. Keep green on your screen. We'll see you the next time. Bye for now.